Financing Fridays. Hi, welcome to the Froggy Five. I'm your host, Jim Freilich, founder and managing member of Froggy Companies. And today I'm super excited to be interviewing Andrew Campbell from Wildhorn Capital. And now I want to talk about financing and funding. You've learned a lot and done a lot in this space, and I'm wondering what you might be doing these days to deal with the challenges going on, either on the equity side or the debt side. And if you don't have something recent on your mind about financing and what you're doing, then maybe you have some other great lesson learned where you've creatively financed something or succeeded.
Yeah, well, look, one of the great things about real estate is you can put leverage on an asset, and so you can go, find a lender in debt that takes your return farther, and you don't have to have 100% cash to go buy a $80 million property, for example. But I think you do have to be really thoughtful about what your business plan and strategy is for the asset, and then kind of aligning your capital stack in a way that aligns to that. I think when we made the decision a couple of years ago to really double down and say, hey, we're Central Texas folks. This is what we know. This is where we have conviction. We're not going to go into other markets. What we do want is the ability to do different types of deals within Central Texas. So amongst our portfolio, we have 80s value add properties. There might be a covered land play that we're re-entitling it, but that's a 3 to 5 year business plan where we might have a shorter term, loan on that structure, and maybe that's a 70% leverage deal. Well, we also have brand new property that was built in 2021 that is meant to clearly not a value add. It's just we love the location. It's got barriers to supply. That's a 10-year plus investment with a capital partner, whether we've got one with a single family, one with a sort of longer term fund. That business plan is very different than this 80s business plan. And so getting your debt structure lower leveraged, fixed rate for long term, that works on a long term play. It doesn't work if you're trying to do a shorter term investment. So I think thinking through your business plan and aligning your debt there, but then also just knowing and understanding and being truthful, I think, about what your investment thesis on an asset is from an equity standpoint. When you're looking at talking to equity investors, hey, here's what this business plan is. And all of our deals don't have the same structure. They don't have the same, it's not just a rinse and repeat. A 10-year deal, that's more of a cash flow play, a wealth preservation play, a depreciation and tax play. I'm not targeting I'm not going to get a huge IRR in 10 years because I'm investing here for different reasons. I believe in all those reasons, and I know why we're doing it, and know why our investors are doing that. That looks and feels different than, hey, I'm trying to go create wealth and hit a triple in 4 years on this value add. I'm trying to create a ton of value. That's a different mentality. Hey, there's no cash flow on this deal. We're trying to go hit a big lick in a few years versus this is a slow and steady cash flow deal. So you got to understand in the differences in who your investor is and kind of what are people interested in. Our build to rent deal, I mentioned it as a sort of somewhere in between. There's a development component, there's a refinance component, you get some of your cash back, and then there's a period of time where you're going to get really healthy cash flow returns before we eventually will exit. So I don't know we're doing anything necessarily creative or unique there, except we're not married and wedded to any one specific structure. Back to me loving the deal and creating the deal. We would use the word conviction a ton. If I've got conviction about an asset, about a deal, about a business plan, can we go execute it? What's the structure that works for that deal? We operate a really lean team. We have 6 people on purpose so we can be creative. And I want to be able to go execute interesting deals and not us have such a big overhead or payroll load or whatever that it's got to be this or we can't do the deals. I can fit into almost anything if we want to, and if you want to, and if we find a mutually beneficial partnership, and it's hey, that we both agree about this business plan, this structure, this deal, let's go. And that's where the creative part comes in, and the part that I frankly just really enjoy. So we're not doing anything super special or creative other than being able to change what we're doing on a deal by deal basis.
Well, that in and of itself first of all, it's a great answer. Second of all, it's both honest and it's an approach based thing. Just from listening to you, because I don't really know you other than a few conversations we had before, but from listening to you, I perceived that approach of each deal's unique reminds me of like what makes Bill Belichick. One of the things made Bill Belichick, and I'm a New England Patriots fan now because I've been in New England since '98, right? After miserable years as a Browns fan, because I'm originally from Cleveland. But he game planned every week. Like he said on an interview once, we're all just doing different variations of what Paul Brown came up with at some point. But in terms of your deals, the fact that you're taking each one and saying, we're going to game plan this one specifically, that in of itself is unique. And a lot of people don't think that. People do try to put square pegs in round holes. They do it all the time at really big deals too. Yeah. And a lot of people don't understand that nuance. So I do love that approach. Nimble, small team. I love that as well. That's a great lesson in and of itself. And setting up the financing. And because you guys are specialized in Central Texas, which I think was probably a burden off your mind in terms of if you ever thought, oh, we're going to expand here and there. Probably great that you're not planning on doing that beyond your area. Texas is big enough to be its own country, as we all know.
Yeah.
And your area, I'm guessing that you've got all these lender relationships now too. So you probably have a stable of people. You don't have to go far. You don't have to go looking, I'm thinking in New York City or Chicago or San Francisco for money, right? Or am I wrong? Have you had to reach?
No, we do. I mean, we got lenders that are in partners in all three of those markets, actually. But I think what it allows us to do is we're the local operator, and we want to be a resource. So if you're our lender who's based in Chicago, and you're looking at a deal from somebody else, and you want an opinion, call me. I'm going to tell you what we think. Well, why I like that area, why the northeast corner is where you want to be and not the southwest corner. We'll tell you what we think of the asset, what we know about who the developer was or is or whatever. So I think being a local resource to a lender about our specific deal, but about our market in general, same thing for equity partners. Hey, we're here. It's our job to know this market better than anybody else, to have all the data, to see all the deals, to know who's coming to town. You're sitting you're in New England. You shouldn't be the mark at the poker table. Come down, invest with us. We should know it better than you. If you can do it as good as we can, we shouldn't be in business. Like, we're here every day and we know it. I shouldn't be able to come into your backyard and win, right? Like, it's a little bit of square peg and round hole, but that's kind of how we operate.
You threw me off again with an amazing answer, because a Boston guy. So these lenders are smart everywhere. So a Boston lender would say, hey, Andrew and Wildhorn, these guys know Austin. So I'll give you a better loan deal. Yeah, because you know Austin. So in my mind, when I asked you that first, I just pictured that there's so much money in Texas and in Austin now, especially. It's becoming tech capital of the world again. For the middle of the country, that I would expect all the local lenders to outcompete against the guys from outside, but apparently not necessarily so. And you probably want to diversify anyway and have different options, right? So Hey, thanks for having me on. If anybody else wants to find out more about what we're doing, please come to froggycompanies.com. Check out our 3 different business areas. We also have the Froggy Fund 1 that's now open for up to $18 million. We're going to be investing that $18 million across a diverse number of assets, cash flowing and ground up. And I'm really excited about this fund and really confident that we can outperform most of the other people out there in terms of what we invest in and how we do our due diligence and the type of partners we put together. So it's great talking to you, and see you next time.